Self-balancing ledgers. Part 1. BAT ledger. BAT ledger adjustment account. Dear students, today let us learn about the system of self-balancing ledgers. BAT ledger. Advantages of self-balancing system. System of self-balancing ledgers. The agreement of the books of a financial concern is a matter of very utmost importance. Anything short of an absolute balance provides a possibility of the existence of serious discrepancies, and though a small difference probably consists of an important oversight, it may conceal several grave errors. The important part, therefore, which a trial balance plays in the preparation of final accounts may thus be realized. In the case of a small business where all accounts can easily be accommodated in a single ledger, if the presence of a clerical error is detected by a disagreement of the trial balance, it will not be very difficult matter to spot the mistake, as all the transactions of the period under consideration can be run through in a short time. In the case of large business, however, where there are several ledgers in use, the search for an error or errors whose existence would be indicated by the disagreement of one trial balance as prepared from them all would involve an immense amount of labor and time before the same could be located. It is in order to facilitate the location of clerical errors at the time of balancing in case of a large business involving the use of several ledgers that the system of self-balancing ledgers has been devised. The system of self-balancing ledgers consists in so arranging each ledger as to contain within itself all the materials of a complete trial balance, so that a trial balance can be prepared from each ledger separately without the help of any other ledger. In order to make each ledger self-balancing, an extra account called General Ledger Adjustment Account has to be opened at the end of each of the trade ledgers. In a similar way, an extra adjustment account for each of the trade ledgers will have to be opened at the end of the general ledger. The posting to these adjustment accounts in each ledger would be of the contra entries to those that already appear elsewhere in the same ledger. These contra postings would no doubt be made in monthly totals in order to save unnecessary work. For the purpose of enabling these contra postings to be done in totals, it would be necessary to have the original records so ruled as to have a separate column for items that go into each particular ledger, or to have a separate set of original records for each ledger. There being contra entries to those that appear elsewhere in the same ledger, it is natural that a trial balance can now be prepared from each ledger separately. The search of errors could thus be brought within very narrow limits, for in case of disagreement of the trial balance of any particular ledger, it would be necessary to recheck only such transactions as are posted in that ledger. For the purpose of illustration, let it be assumed that there are three ledgers in a business, that is, a bought ledger containing all the trade creditors accounts, a sold ledger containing all the trade debtors accounts, and a general ledger containing all other accounts, and it is proposed to keep them on the self-balancing system. At the same time, at the end of the general ledger, a bought ledger adjustment account and a sold ledger adjustment account will have to be opened. The only thing that now remains to be done is to complete the double entry of each ledger by taking the monthly total of each original record and passing therewith a reverse entry to those that have already been posted in that ledger under the ordinary principles of double entry. In order to make the system of self-balancing ledgers clear, let us take up each trade ledger separately and show step by step how the same is worked under this system. Advantages of self-balancing ledgers. Apart from this, helping towards a speedy detection of errors in case of disagreement of a trial balance, and thus greatly facilitating the preparation of final accounts soon after the completion of the financial period in a large business, the system of self-balancing ledgers has also other advantages as follows. 1. It fixes the responsibility of each ledger keeper as to balancing of the ledger or ledgers under his charge. 2. Coupled with a sound system of internal check, it helps to prevent or detect fraud on the part of those in charge of any of the trade ledgers, and it helps considerably towards the preparation of interim accounts whenever required without having recourse to the extraction of balances from the personal ledger. Credit purchases. From the invoice book, the original double entry would be to credit the individual personal account in the BAT ledger and debit the monthly total to purchase account in the general ledger. Thus, so far as credit purchases are concerned, it is BAT ledger that has got the credits and the general ledger the corresponding debit, and both these ledgers would be self-balanced if a reverse entry was passed to the same extent on the debit in the BAT ledger and on the credit in the general ledger. An extra double entry will therefore be passed with the same total of the invoice book, debiting the general ledger adjustment account in the BAT ledger and crediting the BAT ledger adjustment account in the general ledger. Payments to creditors. The original double entry in regard to payments to creditors and the discounts allowed by them would be to the debit of the individual personal account in the BAT ledger and to the credit of the cash or bank account and the discount account in the general ledger. It would be well to note here that cash or bank account being an asset account and the discount account being a nominal account related to the general ledger. So far as payments to the creditors are concerned, therefore, it is BAT ledger that has got the debits and the general ledger the corresponding credits. Now, if a reverse entry were passed with the total amount of payments made to the creditors and the discounts allowed by them in the course of a month, both the ledgers would self-balance. But as the credit side of the cash book includes also payments other than to creditors on personal accounts, it would be necessary to have a special column on the credit side headed BAT ledger accounts and place therein the amount of cash and discount each time a payment is made to a creditor over and above entering the same in the cash or bank and discount columns as usual. The monthly total of this extra column will now represent the total amount of payments made to creditors in the course of a month, and it is with this total that an extra double entry will be passed debiting the BAT ledger adjustment account in the general ledger and crediting the general ledger adjustment account in the BAT ledger. Bills payable. The ordinary double entry in regard to the bills payable accepted by us would be to debit the individual personal account in the BAT ledger and to credit the monthly total of the bills payable book to bills payable account in the general ledger. Thus, in regard to these transactions, it is BAT ledger that has got the debits and the general ledger the corresponding credit. A reverse entry with the same total, therefore, debiting the BAT ledger adjustment account in the general ledger and crediting the general ledger adjustment account in the BAT ledger will self-balance both these ledgers so far as bills payable are concerned. Returns outwards. With regard to returns outwards, the usual double entry would be to debit the individual personal account in the BAT ledger and credit the monthly total of the returns outward book to the returns outwards account in the general ledger. A reverse entry with the same total, therefore debiting the BAT ledger adjustment account in the general ledger and crediting the general ledger adjustment account in the BAT ledger will self-balance both these ledgers so far as returns outwards are concerned. Allowances from suppliers. The original entry regarding allowances granted by creditors in respect of short weight of measure, defect in goods, etc. would be passed through the general debiting the particular supplier's account in the BAT ledger and crediting allowances account in the general ledger for self-balancing purposes. Therefore, the BAT ledger would want a credit and the general ledger a debit. Thus, the self-balancing entry with the periodical total of such allowances would be to debit the BAT ledger adjustment account in the general ledger and to credit the general ledger adjustment account in the BAT ledger. Trial balance of the BAT ledger. As the double entry of every item that has appeared in this ledger has been completed by the passing of the above adjustment entries, a trial balance of the BAT ledger itself can now be prepared independently of the other ledgers. The balances of the various personal accounts as extracted from this ledger would be naturally on the credit, but the general ledger adjustment account appearing in this ledger would show a corresponding debit balance. The following illustration will further explain how the extra adjustment accounts for the self-balancing of the BAT ledger will appear when all the adjustment entries as above described has been passed. The adjustment account at the end of the BAT ledger will appear as under General Ledger Adjustment Account. To opening balance brought down total of balances on suppliers account as at the commencement of the month 12,500. January 31 to credit purchases 7,200. On the credit side of the general ledger adjustment account, by cash payments 5,600, by discounts 400, by returned outwards 300, by allowances 75, by bills payable 2000, by balance carried down total balances suppliers account at the end of the month 11,325. And in the general ledger, the following adjustment account will be appear in respect of the BAT ledger adjustment account. January 31, to cash payments 5,600, to discounts 400, to return outwards 300, to allowances 75, to bills payable 2000, to balance carried down to total of balances on suppliers account at the end of the month 11,325. On the credit side, by balance brought down total balances on suppliers account at the commencement of the month 12,500, by credit purchases 7,200. This is how the self-balancing ledgers accounts will appear. The debit balance at any date as shown by the general ledger adjustment account opened at the end of the BAT ledger will be equal to the total of the balances on the creditors accounts extracted from the BAT ledger on the same date. The reason is that all the items which have been posted in detail on the several personal accounts in the BAT ledger bear their contra postings in the total on the general ledger adjustment account opened in the same ledger. This will help towards the completion of a separate trial balance from the BAT ledger alone. It should further be noted that the BAT ledger adjustment account opened at the end of the general ledger contains the same figures as appear in the general ledger adjustment account, but on the opposite sides, and must therefore necessarily show the same closing contra balance from time to time as is shown by the general ledger adjustment account in the BAT ledger. In fact, both these accounts are extra counterparts of each other. The BAT ledger adjustment account will help to self-balance the general ledger so far as the postings from the BAT ledger are concerned, inasmuch as this extra adjustment account bears contra entries that in respect of transactions with suppliers of goods which already appear elsewhere in the same ledger. It need hardly be pointed out that both the above accounts result from the extra entries passed at the end of each month for self-balancing purposes from the totals of the subsidiary records concerned. Where there are several BAT ledgers, each such ledger will have a general ledger adjustment account therein, and there will be a separate BAT ledger adjustment account for each such ledger at the end of the general ledger. One more fact which needs to be emphasized here is that the BAT ledger adjustment account represents the sum total of the whole of the transactions with the suppliers of goods for a particular period, as it contains in a summarized form, and on the same sides all the entries which have been posted in detail in the BAT ledger. In the next lecture, we will discuss about self-balancing ledgers, part 2, sold ledger adjustment account.